Welcome to my video blog about investment. Please subscribe to the channel and let's talk about the finance and other economy news. Let's start. So, projections for the ruble. What to expect on the currency market in 2025? Forecasts for the ruble in 2025 reveal a wide range of predictions, with the dollar expected to cost between 96 and 130 rubles. The Ministry of Economic Development offers the most optimistic outlook, projecting an average dollar rate of 96 rubles for the year. This prediction was reaffirmed even after the dollar surged to 110 rubles in late November. Sberbank CEO Herman Gerev anticipates the dollar reaching 115 rubles by the end of the 2025. Meanwhile, Kochetkov, president of investment holding Finam, holds a more pessimistic view, stating that the ruble's performance will largely depend on geopolitics. According to him, it's difficult to make precise forecasts when geopolitical events can shift in any direction. For now, geopolitics are slightly more favorable to Russia, but not significantly. I personally expect the ruble to weaken further with a potential spike to 130 rubles per dollar. However, the average rate will likely hover around 115-118 rubles. Other analysts are moderately optimistic, predicting the dollar will settle between 107 and 110 rubles. They expect a volatile trajectory for the ruble, characterized by periods of gradual strengthening followed by sharp declines, ultimately creating a downward trend. Okay, performance of the ruble in 2024. In 2024, the dollar gains over 10%, stabilizing above 100 rubles. The government loosened currency control measures, reducing requirements for exporters to repatriate earnings. In November, the Central Bank of Russia intervened to stabilize the situation by halting yuan purchases for the Ministry of Finance under the budget rule. This action brought the dollar back to the 100-105 ruble range. Though experts believes this level would not hold for long. Okay, a senior analyst of Cifra Broker suggests that while the ruble may show slightly strengthening at the start of the 2025, its dynamics will remain tied to external trade indicators. She notes sanctions continue to limit export growth potential, and the oil market hasn't shown significant gains in recent months. While current prices are comfortable for Russia, import demand remains high. If there are no external shocks, the ruble is likely to approach 110-115 per dollar over time. However, she also adds that most of the adverse scenarios may have already played out, including sanctions targeting Russian banks handling export payments. Any further sanctions, especially on oil export, would pose a serious risk to the ruble. Central bank's action in 2025. The central bank has announced plans to resume currency purchases for the Ministry of Finance starting January 9, allocating 5.5 billion rubles daily for these operations. Simultaneously, it was continued selling currency at a rate of 8.8 billion rubles per day. Analysts believe this action will stabilize the market without significantly affecting the exchange rate. And director of analysts at Region Investment Company explains January is a short business month and the Chinese New Year at the end of the month will further reduce imported demand for the currency. Central bank operations will balance the dynamics, and I don't expect any major impact on the exchange rate in the near term.
Consumer demand remains strong despite slower lending, as wages are rising, allowing people to continue purchasing imported goods. I predict the dollar will hover around 100 rubles in the first quarter before moving higher, averaging 103-104 rubles, she said. Key factors impacting of the rubles. Oil exports are expected to decline in early 2025 compared to the previous year. Additionally, any actions by Donald Trump, such as order to rapidly increase United States oil production after January 20, could impact global markets. However, OPEC is likely to work to keep oil prices above $70 per barrel. Lower export volumes may negatively affect Russia's export revenues. Market participants also anticipate continued volatility. In December 2024, international trading platforms reported abnormal losses for the ruble, with the dollar jumping from 100 to 107 rubles in just a few hours. Also initially thought to be a glitch, the central bank later confirmed increasing currency demand, which significantly impacted its price. Overall, analysts expect the ruble to face challenges in 2025 due to sanctions, high imports demand, and fluctuating oil revenues. While short-term stability is possible, long-term pressures are likely to push the dollar higher against the ruble. And the Central Bank of Russia is considering to possibly freezing personal deposits as an alternative to raising the key interest rate. The concerns nearly 55 trillion rubles as at December 2024. According to reports, Central Bank Chair has tasked a commission comprised of representatives from the three regulatory departments to analyze the feasibility and consequences of the measures. At the same time, the idea has been discreetly introduced into the public discourse to gauge reactions. The economic rationale for freezing deposits while preserving interest payments based on IMF recommendations that are reportedly mandatory for central bank is to eliminate the monetary surplus that fuels inflation. If the 55 trillion rubles were to be withdrawn, it could result in a price surge of up to 100%. Given that the turnover of goods on the Russian market is approximately 60 trillion rubles in 2024, Central Bank frames the freezing of deposits as an alternative to raising the key interest rate. However, is it hoped that this proposal will not come to fruition, even though in theory the central bank has the authority to impose deposit restrictions at any time, citing special circumstances without needing approval from the executive or legislative branches. Central bank's plans may find support from finance minister. Freezing deposits and redirecting them to cover budget deficits, finance national projects, and fund military-industrial complex expenditures would help Ministry of Finance resolve challenges with domestic borrowing through government bonds. His previous strategy to issue debt has proven ineffective, as investors haven't purchased bonds in the expected volumes. Law enforcement agencies and the Russian Security Council have already provided their assessment of the central bank's potential proposals to freeze personal deposits. In short, amidst the ongoing military operation and hybrid sanctions policy, such a step would trigger widespread social discontent, potentially leading to the collapse of the banking system and local and federal authorities. Furthermore, freezing deposits wouldn't address and underlying economic issues caused by the central bank's monetary policy. If would fail to stimulate material production or increase supply in the consumer market, such as confiscatory reform would only make sense in the central bank stopped injection and back rubles into circulation, as it currently does. Proposals to freeze deposits should thus be seen primarily as a form of leverage to overcome resistance to raising the key interest rate later.